every Monday to Friday. This is Peter Lewis's Money Talk. Money Talk.
Good morning. I hope you had a great weekend. Welcome to the start of a new business week. This is Peter Lewis with the latest business, finance and economic updates for Monday the 19th of August on Money Talk. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, Kamala Harris on Friday unveiled for the first time her economic policies, including millions of new build homes and help for first-time home buyers, tax breaks for families, and a ban on grocery price gouging in her first speech focused on economic policy as she tries to persuade voters she can tackle a cost of living crisis that's dogged the Biden administration. The Democratic presidential candidate said in a speech in North Carolina that the three key pillars of her economic plan are fighting inflation, recalibrating the housing market, and cutting taxes for families. Paetongtarn Shinawatra, the 37-year-old daughter of divisive former Premier Thaksin Shinawatra, has been appointed by the Thai Parliament to be the country's next Prime Minister. She becomes the third Prime Minister from the influential Shinawatra family after a majority of lawmakers in the House of Representatives voted in favour of her nomination on Friday. China's youth unemployment surged to 17.2% in July, the highest level in the 8 months since the National Bureau of Statistics adopted a new method of counting unemployed people. The jobless rate for 16 to 24-year-olds, excluding students, rose from 13.2% in June and ended 3 months of declines, according to MBS data released on Friday. Hong Kong's economy expanded 3.3% year-on-year in the second quarter, accelerating from a 2.8% rise in the previous period and in line with preliminary estimates. The acceleration was primarily driven by a rebound in government spending and a significant increase in fixed investments. In contrast, private consumption declined. On today's programme, I'm joined by Alex Wong, Director at Alex KY Wong Asset Management, and Christopher Lee, Partner at Farron, Augustine and Alexander Investments. If you want to get in touch with any questions or comments, please go to my website, peterlewismoneytalk.substack.com. Shares on Wall Street rallied Friday on the back of robust US retail sales data and strong results from Walmart to close out its best week of the year and the 7th consecutive session in the green. The S&P 500 added 0.2% to 5,554. The Nasdaq Composite gained 0.2% to 17,632 on Friday, and the Dow rose 97 points, also 0.2% to 40,660. For the week, the S&P 500 added 3.9%. That's its best week since November 2023. The Nasdaq gained 5.3% over the week and is up 9% now from the panic sell-off lows hit earlier this month. The 30-stock Dow advanced 2.9% on the week. And following the comeback last week, the S&P 500 is now just 2% away from its record high hit in mid-July. Nvidia shares roared back 19% last week following 4 weeks of losses. The weekly move is its best week since May 2023. US 2-year Treasury bond yields ended Friday 5 basis points lower at 4.05%, but up 39 basis points from their recent low hit on August the 5th. 10-year yields fell 4 basis points to 3.88%. The US dollar index saw its third straight week of losses. That's the longest losing streak since March, as it tumbled to 7-month lows. The offshore yuan depreciated past 7.17 renminbi per dollar, retreating from a recent one-year high and impacted by poor economic data from China. The Japanese yen rebounded 1.1% from the 2-week low reached in the previous session. However, over the week it was 0.7% lower at 147.58 yen per dollar. Gold jumped to a record high, topping $2,500 per troy ounce for the first time ever, on hopes the Fed is edging closer to cutting interest rates. Spot prices of the precious metal gained 2.1% to trade at $2,507 per troy ounce. Oil prices were flat on the week after some volatile sessions. On Friday, Brent crude oil fell 1.7% to $79.68 a barrel. And it was another choppy week for cryptocurrencies. Friday saw Bitcoin surge back up to $60,000 as Kamala Harris outlined her economic policies before easing slightly to end 3.2% higher at $59,200. For the week, Bitcoin was down around 3.5%. And futures markets pointing to a gain for the Hang Seng at the open. Looks like it's going to start the day about 90 points higher. That's about 0.5%. Projected to open at 17,520. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
The start of a new week and probably a busy business week it's going to be as well. Let's welcome our Monday morning guests. As always on a Monday, we have with us Alex Wong, Director at Alex KY Wong Asset Management. Morning, Alex.
Hi, morning, Peter.
And also with us is Chris Lee, Senior Partner at Farron, Augustine and Alexander Investments. Morning to you, Chris.
Good morning, Peter. Good morning, Alex. Hi.
I want to kick off with the data that we had out of China last week. In summary, retail sales grew more than expected in July, while industrial production missed forecasts. The National Bureau of Statistics reported last week. Retail sales rose by 2.7% in July from a year ago. That beat forecasts of 2.6% growth. Industrial production rose by 5.1%. That was below economists' forecasts. Fixed asset investment for the first 7 months of the year rose by 3.6%. That's below the 3.9% growth analysts had predicted. On the housing market front, within fixed asset investment, the drag from real estate investment worsened, down by 10.2% on a year-to-date basis as of July, versus a drop of 10.1% in June. Residential property sales plunged once again in July, down almost 26%. Year on year, and real estate prices also declined more than expected in July, including in first-tier cities. Alex, let me ask you about that, because we were hoping, weren't we, in this data, maybe we would start to see a stabilisation in the housing market, and that in turn could help the overall economy, but there doesn't seem to be too much sign of that.
Yeah, I don't think the housing market would see a bottom soon. I think it probably would still gradually getting worse in China, because I think people know that inventory are still high and the prices will not be going higher, and buying a house actually is a very serious investment in life. So I think that they would just take a wait and see attitude unless they see some big bargains. So I think this is quite natural, and so that would take a long time for the housing market to get a bottom. But I think industrial production probably will still be okay. I think especially we would have this election in the U.S. People probably would be rushing to get more import for export from China because of the fear of tariff in next year. So I think there will be some pickup in industrial soon, probably. And then for the retail side, I think we probably may see some stabilization. Probably there would be some more stimulus from the government, so that probably help the retail. But I think for the housing market, that will still be bad.
Chris, what are your thoughts? It does seem a rather lopsided economy, doesn't it, at the moment?
It is not good. And let me add a little bit more data to what you and Alex just said. The data from CEIC measuring the China Consumer Confidence Index. So if you look back the last 3 years since August 2021, it was at roughly 120 level. And August 2024 is now at about 85. So the consumer confidence level is low. So there's definitely a consumer confidence issue here. And I think the party leadership is definitely thinking about doing something and also having some policy that will, number one, I think boost the economy based on the entrepreneurship and also the private sector people. And number two, I think they have to also address this fear of a potential social unrest and also potential stability issue that we see. There is actually a Stanford scholar in California named Scott Russell, who has recently written a paper about getting ahead in today's China. And the paper is still a working paper. It's not formally released yet, but it shows that there's an increasing inequality concern over the last 20 years or so, since 2004 to 2014 and nowadays in 2024. And also, people feel that there's a decreasing relevance of working hard and having the right skills in getting ahead. So these are the two major issues, and I think the party leadership is definitely thinking about some policy that will boost the confidence.
Well, what they were talking about, I think they called it non-drastic policies, didn't they, that they were thinking about? What sort of things could that include?
Well, I think the non-drastic policy is probably similar to what traditional economists have said. Sometimes no policy, leaving them alone might be a good way of doing it. If you remember what Ronald Reagan said like more than 40 years ago, I mean, government is not the solution to problem, right? So they try to leave, I think, the businesses alone. And historically speaking, Chinese entrepreneurs are pretty resilient, number one, and they are financially motivated, number two, and they are pretty good at building businesses, number three. If you just look at the examples from probably Thailand, Indonesia, a lot of the businesses are owned by Chinese. And even nowadays, right, some of the key companies and businesses in Silicon Valley, NVIDIA, and also AMD, they're also built by Chinese immigrants. So I think leaving them alone could also be a good non-policy policy.
So, Alex, also there was worrying data on the unemployment side, wasn't there? The urban unemployment rate did tick higher to 5.2% from 5% in June, and then the youth unemployment, that's jumped, even under the new way of measuring it, it's jumped from 13.2% in June to 17.2% in July. Now, I presume that's because we're getting a lot of graduates joining the workforce, but nevertheless, this is a worrying sign as well, isn't it? And presumably just makes that inequality that Chris was talking about worse.
Oh, yeah, this is a structural problem, I think. First of all, I think many young people probably are not that driven to get employed these days because probably their parents have got richer during the last 2 decades, so they can just relax at home. So that is one thing. Another is there's less startups now or less companies to take that kind of people. So manufacturing actually probably would be affected by automation. And then for the technology side, many big companies or the small companies actually are not that aggressive now. So they are laying off, and so this is the structural problem they face. So I think this probably would still be a huge problem because for manufacturing or for technology side, probably the situation is still quite bad. So on services, probably still okay, but I don't think many young people would be settled to get some jobs in the service sector.
Because they don't, after 3 years at university, they don't want to work on farms or in a coffee shop or on a factory floor, really, do they? But does this mean that they've got to change their expectations, or has the government got to do more to help here?
It's difficult for the government to do more. I think they probably like Chris said, they just let the business do their way. Probably that was the best way. Probably.
Chris, the problem is, though, some of the businesses that used to absorb these graduates, like the online education sector, for example, that was a big employer, wasn't it? They've, in effect, been closed down by the government.
That's right, yeah. So, I mean, Alice's point is spot on. Many of these young people are still looking for their quote-unquote like perfect job, right? So they don't want to settle for anything in farming or maybe just serving coffee. Some of them just want to be a quantitative researcher at a top hedge fund or be an equity derivative trader at Goldman Sachs. They don't want to just take any job. They want to find their perfect job. So that's why the youth unemployment rate is so high. But I think there is one positive element here, which is that these young people are very different from the previous generation. Their parents have saved a lot of money, and that's why these people can afford to stay home and take longer to really look for their perfect job. So if you look at the savings that we see since COVID-19, right? So the net increase, right, since 2020 in bank deposit in China is roughly about 9 trillion US dollars, right? So this is more than 2 times the GDP of Japan. So the consumption economists will come in here and say, well, these young people may not be looking for their perfect, may not have found their perfect job, but I mean, they are also very different from their parents, that they are much more motivated to spend money. So the consumption, I think, economy could be the saving grace here at the end of the day, that as long as that $9 trillion go into some form of spending, this will stimulate, and this will probably be an uplift for the Chinese economy in the next 2 or 3 years. So I keep my hopes high on these young people that they will spend and they will buy stuff.
Oh, okay. Let me ask you about the Hong Kong economy. Alex, it expanded 3.3% year on year in the second quarter. That's in line with preliminary estimates, driven mainly by a rebound in government spending. It was up 2% compared with a decline of 2.2% in the previous quarter. In contrast, private consumption declined on a quarterly basis. The economy expanded by 0.4%. That's a very sharp slowdown from the 2.5% growth we saw in the previous quarter. Alex, first of all, what's your sense of the Hong Kong economy based on this data?
I think, of course, the sense is still quite bad. I think people are all going to spend in Shenzhen or elsewhere in the Greater Bay Area. So that is the key problem right now we are facing. And the stock market actually is getting lower turnover these days already. So I think probably we will see the turnover to stay low for a while. And for the property market, I think that would still be stagnant at best. So I think the key pillars in Hong Kong actually are all facing challenges. So I think the outlook is still quite bad. And I think probably may still be supported by government spending.
Chris, what do you make of it? It's not necessarily a great economy when you've got to rely on the government to prop it up, really, is it?
The stock market turnover is very low. I do agree with you and Alex. And fortunately, that's not the only asset class that we trade here, right? So apart from equities, obviously you, I think, are aware that the government, both in Beijing and also in Hong Kong, are really trying to make Hong Kong the biggest offshore renminbi trading center, right? So this is a potential development. And the second thing is that I think there's also been public papers commenting that Hong Kong can be the largest carbon trading exchange in the world. And so if you look at the track record, I mean, Hong Kong is still, I think, at one point and also over the last couple of decades, has been the largest listed warrant market. So in terms of equity derivatives, Hong Kong is number one in terms of the listed warrant market trading around the world. So there's additional asset classes that the financial markets can trade. And also previously on your show, Peter, I think many people have commented that Hong Kong will be the second largest wealth management center after Switzerland. And again, I mean, if you look at private asset management, firms like PAG is now managing $55 billion, so challenging the traditional TPG and also kind of like KKR type companies. So both in terms of asset management and wealth management, I think there are some very positive developments there.
I mean, these are all good things, aren't they, in terms of keeping ourselves at the forefront of being an international financial centre. What about for the broader economy, though? I mean, these things obviously don't help things like the retail sector, tourism and so on. They're really suffering, aren't they?
Yes, so the secondary effect is that when we trade more offshore renminbi and when we do more carbon trading, there will also be jobs in the back office and also the middle office. So not everybody is going to become an equity derivative trader, but there will be other jobs in bookkeeping, in accounting, and also in settlement that will generate more opportunities for other people. So I do think that the carbon trading exchange and also the offshore renminbi trading initiative in Hong Kong will generate more jobs going forward.
Okay, Alex, what about the property prices? How much is Hong Kong in a financial hole here, or the government in a financial hole? Because we've got home prices now at an 8-year low. As a result, the government's not collecting anything like the amount of money it used to from land sales. Back in 2017-18, it collected about 165 billion Hong Kong dollars from land. And it was about 1/3 of Hong Kong's government revenue that year. Now, in the last fiscal year, 2023 to 2024, it was just 20 billion, actually under 20 billion Hong Kong dollars, almost 80% below the budget estimate. And as a result, we're seeing our reserves decline. We're posting year after year now budget deficits. Has something got to be changed here now?
I think that it is quite difficult right now because the inventory is built up is still quite high, and that will take a long time to absorb. And buying interest actually is low because people know that the prices is not going higher. And as I've said, the buying a property actually is a very serious investment in life. So I think that people will still wait in Hong Kong. So that will take a very long time for the Hong Kong market to rebound. So I think that land sales probably would still be quite bad and difficult because if you take into account of the high interest rate, that means that the land actually would depreciate more than the home prices. So I think that is a very big challenge for the government. If they want to sell, they have to sell at very low price right now. So I think the government probably would just balance their budget by debt issues. I think that probably would still be the way they're doing. Probably they would try to issue more government debt.
Okay, I mean, Chris, this is a problem for the government, isn't it? Under the basic law, the Hong Kong government's obliged to try to balance its budget and avoid deficits. But we've had, 4 deficits now in the past 5 years, and our reserves, which back in 2019 were about 1.2 trillion Hong Kong dollars, have almost halved now. They're about $615 billion as of the end of June. The government's got a problem here, hasn't it?
Yes, short term. And I think, historically, and if you look at the way that we've always managed to also balance it over time. And so people like yourself, myself, we pay our taxes and then we generate different revenue for the Hong Kong government. And also there will be also, I think, new opportunities. So I think right now in the short term, I understand a lot of people are pretty bearish. And I think we should look at the medium to the long term and stay bullish.
Okay, let's turn our attention to the US. Kamala Harris on Friday unveiled for the first time her economic policies. That includes millions of new build homes and help for first-time home buyers. Tax breaks for families, a ban on grocery price gouging. She laid this out in her first speech, focused on economic policies. Alex, at last, we're hearing a little bit now from about the economy. A big contrast, isn't there, with Donald Trump? She sees a much bigger role for government in the economy.
Yeah, but I think people probably would be a little bit hard to believe her because she's in the Biden administration, and during the Biden era, inflation is very serious and getting so high. So for her agenda, I think the first probably was still to control inflation, but her track record actually is still is quite bad. So I think it's quite difficult for her to be convincing. So I think probably for her, I think she probably would try to do a lot of things to make people believe that she can control inflation.
But price gouging, is that the reason why there's inflation? I would have thought there are several reasons why there are inflation, but maybe price gouging, even if you can define what price gouging is, that's probably not the top of the list, is it?
Well, I think what people probably would blame the government for the changes in that 4 years. So I think it's still quite difficult, and the government actually cannot do many things, and I think it's quite difficult for her to get works on the economic front because of these past 4 years inflation.
Chris, what do you think of these plans?
Mm-hmm. Yes, so I think fighting inflation and also tax cuts are the two very, very key things that Harris is trying to do. As you said, I think Trump has consistently been accusing Biden's administration together with Harris, I think, for the reason why prices are so high. And actually, Trump has said many times in public that it's Biden's fault for, the inflation that we are experiencing in the United States. So price gouging is just one of the many, I think, factors. The moms and pops, sort of like grocery stores are increasing their prices on water and food and all that. That's one of the many things. And I think the main argument behind Trump's, accusation is really the money supply that Biden has given into the economy over the years, especially during COVID time. So he has given a lot of checks to people and therefore generated, I think, that inflation pressure. And right now, they are showing I think the Fed is seeing some data that is coming down, but it's probably just transitory. And so there is an argument to be made that the inflation battle is not finished. It's still ongoing.
So does that mean then that the Fed can't cut rates?
Well, but the market has already priced in, I think, the 100 basis points cut, right? I think it's very clear that in September, I think by about 17th of September or 18th of September, there will be at least 25 basis point cut, if not 50 basis point cut. And then by November and also by December, there could also be up to like a total of 100 basis point cut. And also the expectation, if you look at the Goldman Sachs report, is that there is potentially a 25% probability of a recession. So I think Chairman Powell is preparing his speech in Jackson Hole on August 22nd. And if I were to speculate, I would think that there will be more clear signs of interest rate reduction.
Alex, at Jackson Hole, as Chris mentioned, Jerome Powell's going to make a speech on Friday. I think the markets are really waiting, aren't they, for a clear sign that rate cuts are coming in September.
Well, yeah, of course. I think it's just a matter of how dovish he will be. So I think people are expecting him to deliver some, dovish speech. Yeah.
And if he doesn't, are the markets going to turn tail and start to fall again?
I think if you look at the VIX, it is a super low right now. So I think the market actually would not be that volatile these days, probably. I think after the turmoil this month, I think the market actually would not be that volatile.
Well, we had a lot of data, didn't we, last week out of the US, which showed that inflation was coming down, but also the consumer, a lot of concerns about the consumer. But the retail sales data seemed to show that the US consumer is in quite good shape, albeit is building up quite a lot of debt at the moment to carry on spending.
Yeah, I think in the meantime, people are expecting some sort of a soft landing scenario. So again, so that is a little bit premature, probably. People can change on another set of data. But I think people are expecting a better scenario right now. And I think at least people are confident that capex by the large caps probably will still be okay. So I think the market probably will still more reliant on the big techs now.
Chris, what are your thoughts? Do you think we're going to see a soft landing in the US? Is the data showing that it's on track?
Well, the data that you mentioned, Peter, I think is something that the people in the Trump camp, right, really say that they don't believe. They think that this is transitory. I think last week you mentioned that there was this 2-hour interview that Trump did with Elon Musk. And I actually listened to that, right, for that 2-hour period. And he was really just, I think, criticizing the Biden administration for being the reason why there's inflation. And he's very clear about this is Biden's fault, right, for generating the inflation. So while we see a little bit of a downturn in the figure, but if you speak to the Trump camp, they'll say this is not something they believe. This is transitory.
What about the markets?
Markets, well, yeah, the markets have been doing well, right? So I'm glad you asked, because this is also, I think, the reason why I think the DNC in Chicago will have a lot of positive sentiment. If you look at the S&P 500 stock index, year to date is already up 16%. And if you look at the last 12 months, it's already up 26%. And that's a good reflection of the state of the economy. And so I think if this momentum is continuing, I do think that, we're not talking about politics here, but I do think that Kamala Harris has a very, very good chance.
Okay, well, she's certainly surging, well, maybe picking up in the polls. I don't know about surging, but she's overtaken Donald Trump in the polls now, hasn't she?
Absolutely, yes. Mm-hmm.
Alex, what about the markets here? Asia did very well last week, didn't it? Apart from China. Mainland China was the only market that was down, underperformed the rest of Asia. It's also currently the Shanghai Composite is currently the only major regional index with a negative return for 2024. It's down 3.2% so far. What's your outlook going forward?
For Asia, I think probably still underperform. But for Hong Kong, I think we have some hope this round. I think we probably may see some upside in the next 2 weeks to 1 month. First of all, I think after big tax earnings release, I think sentiment towards that sector actually is improving. We see a very huge jump up in JD after the results, and Alibaba actually was down first and then get back up. I think people are still betting that it would be getting into the Connect program soon. I think that probably will still get more speculative interest on Alibaba. And Tencent actually has delivered a good results, but people probably are not too excited first. But I think after the resumption of the buyback, Tencent probably will still be gradually going higher. So the big techs actually are doing okay. And for the stocks in ALEC index, I think that they probably are now going back up because I think that people probably are looking for quality companies to buy in Hong Kong. So I think, and also HSBC probably would rise along with those big banks in the US. So I think for the index, actually, it is a chance to go up towards the 80,000 level now.
So last week, the ALEX index, it's your index that consists of HSBC, China Mobile, CNOOC, China Resources Power and Zijing Mining, had a good week last week. It's now up almost 27% since inception, just almost a year ago, wasn't it, in September last year. Over the same period, the Hang Seng is up about 2%, so up in absolute terms, up in relative terms as well.
Yeah, I think it will still be beating the Hang Seng index. Although I think at these times probably we will have some revival in the interest in the big techs. But those companies actually are more comfortable to hold for long term. And I think they are probably finished the correction this time. So hopefully they will be getting back up in the coming months.
Chris, what are your thoughts about the local markets here in Hong Kong?
That's right. I think for the local market in Hong Kong and also for the domestic Asia markets in China to perform better, I do think that a key, topic to address is really the U.S.-China tension here again. So I think in the long term, the frequency of dialogue between the leaders and also the quality and the substance of their discussions have to play a very key role here. And I have a bit of a positive news to share here because I think that the VP choice by Kamala Harris, Governor Wong from Minnesota, he had about 10 years of experience dealing with China. So in 1989, he was a teacher in a Guangdong high school. And then for about 9 years, from 94 to 2003, he ran a private business with his wife, helping American high school students to learn and also study in China. So I do think that having more high-level exchange between the nation's leaders are going to be very critical to boosting the confidence in the local stock market. So I remain, hopeful that they will have more quality dialogue.
Do you think there'll be any change in policy towards China if Kamala Harris wins the presidency?
I think I said it in the earlier episode before that I don't expect any substantive change because both parties are currently quite hawkish against China, but having more conversations and having more dialogue with people like Jim Wong's experience would be a positive catalyst in the current climate. So I do hope that there will be more meetings in terms of frequency and also quality.
Okay. Alex, we heard last week that foreign investors have pulled a record amount of money from China last quarter. The investment liabilities, which show up in its balance of payments, dropped almost 15 billion in the April to June period. It's only the second time this figure's turned negative. If the decline continues for the rest of the year, it's going to be the first annual net outflow since at least 1990, when comparable data was first collected. Problem is, we're not going to know, are we? Because China's going to stop reporting this data. So how big an issue is this?
Well, I think it is reflected in the market. So I'm not too concerned because we already know that probably the implication is that we probably may recover in a low turnover mode in here or also in the Asian market. So turnover-wise, probably we will stay low. Interest actually may not be getting back soon from the foreigners. But I think overall, these times in terms of the speculation, probably people are more willing to bet on several big companies. And I think the sentiment towards the consumer market in China actually is getting too bearish. So probably we may have a correction in that area as well. So I think in the short term, at least in the short term, I think we probably may have some upside here. So I'm not too concerned, but that means the turnover in the long term probably may stay low for a while.
Chris, what do you make of this? I mean, it is a problem for foreigners, isn't it? They like transparency in markets. Mm-hmm. They want more data, not less data. So this trend of ceasing to provide data, particularly if it's bad, is not really going to lure the foreigner back, is it?
Right now, I think the foreign investor sentiment is definitely quite negative, and the main driver, however, I hope, is really the domestic consumers and also the domestic investors. And I think domestically, we said it earlier that many of the young people are different from their parents. They are spending more, and they are really, I think, not saving as much. So it's a bit similar to like the U.S. economy in the sense that a lot of the activities are really driven by consumers. So the big domestic consumption, I think, thesis is at play here. So I think while the foreign investors are taking some of their capital out, but the base, as I said before, the deposit that is net increase from 2020 is now amounting to about $9 trillion worth of net increase in deposit. Just imagine if you release that into the domestic economy, that consumption will give, I think, basically the local economy a big boost.
Okay, well, thank you, Chris and Alex, this morning. That's Christopher Lee, who is Senior Partner at Farron, Augustine and Alexander Investments, and our regular Monday morning commentator, Alex Wong, who's Director at Alex K.Y. Wong Asset Management.
You're listening to Peter Lewis's Money Talk. Money Talk.
Thank you for listening to Money Talk this morning. You can find more details about some of the topics I've been talking about today, along with information on other headlines and market moves in my daily newsletter. Take a look at peterlewismoneytalk.substack.com. I'll be back with another show tomorrow. Joining me then will be Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, David Roche, President and Global Strategist at Quantum Strategy, and in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Woods. See you tomorrow.
Money Talk.